Taking a short position is basically just being a stage 5 hater. You should have to sign a contract that you're a stage 5 hater to enter a short position. Welcome back, everybody, to the $100,000 to $1 million public account series. If you're new to the channel, welcome. I started this brand new account with $100,000 cash. I'm taking it to $1 million completely publicly. All of my trades are completely disclosed, and you're welcome to follow along with me. Welcome to the channel. So we finished out the day today. It was an okay day. We were up $2,100. However, we are red on the week. If you remember a couple episodes previously, we did break that 130 threshold. We pulled back a little bit. However, the SPY also pulled back, so it wasn't doing us any favors. This week, I'll show on the screen right here, we had $6,400 in realized profits from MUU, so we were able to outpace the market, beat the threshold that we wanted to, and if it wasn't for us being tactical investors, we would have another $6,400 in losses. So ultimately, that's a huge success, and when we start to get bullish again, we'll see that benefit. So we have a huge week coming up. The big powerhouse NVIDIA has their earnings on the 26th. That is this coming Wednesday. And just like we talked about, this could definitely put the ball back into the court of the chip makers, the semiconductors, the memory chip stocks. But what we're going to go over today is how that earnings call will most likely look and how it will affect the broader market. And guys, we have to remember, NVIDIA is a $5 trillion market cap company. So whether you don't own a single share of NVIDIA, if you're in these index funds like most of you are, this is going to dramatically move all indexes one way or another. So let's get into it. So like we were saying, the index funds. Okay, listen. Everyone says, to diversify the index funds. Right now, NVIDIA alone is 7.6% of the S&P 500. We are talking $5 trillion of market capitalization. And when we're talking the broader supply chain of AI, NVIDIA essentially sits on the throne right now. So NVIDIA's success highly coincides with the success of its ecosystem. We're talking TSN, the Taiwan Semiconductors. We're talking Micron, SanDisk, Meta, Google, Microsoft, all the big names. And we're going to get into a little bit of an issue that could come to light here soon. We'll talk about that in a second. But AI stocks are under pressure before the print. That's why we saw this big red week. Okay, there's two reasons we saw this big red week. Bond yields rose. Okay, now why do we think that's bad for the stock market? Why do we think bond yields rising puts pressure on the stock market? So let's pretend we're a rich guy, right? Let's go over here. Let's check the bond market. We're talking, 4% on the 1-year fixed. 5% on the 30-year fix. No one really uses the 30-year fix, but it's more of a benchmark. However, if we're a big rich guy and we've got $10 million and we say we can put that into a fixed bond, guaranteed money, and make $500,000 a year, why would I waste my time with the risk of the stock market? So when bond yields go up, the stock market pulls back. That just happens. Next, situational awareness. This was a AI hedge fund, was acquired by Citadel. And at first I heard this and I thought, okay, who cares? But here's the big problem. This was a young guy, a 24-year-old guy went out and started a hedge fund. Meanwhile, look at me. I'm sitting here yelling at computer monitors. However, this young man was able to acquire $45 billion worth of liquid cash to invest on behalf of the investors. However, there was a clause in the contract that said they have no power over what leverage or what stocks they decide to go and buy. So they were 4x leveraged on all this AI stuff. He was yielding some crazy returns. What really ultimately put the nail in the coffin, however, is the short positions took on companies that were expected to be overtaken by AI. Now here's a quick side note for you. If you watch my previous episodes, I am very anti-shorting companies, and here's exactly why. The market prices can be irrational longer than you can be illiquid. And let's remember, the most that you can make off a short position, let's say I invest in a stock, and it goes belly up bankrupt. I was 100% correct. The most I can do is double my money. Taking a short position, in my opinion, is basically just being a stage 5 hater. You should have to sign a contract that you're a stage 5 hater to enter a short position. Back to the original point, situational awareness. Being that he was on 4 times leverage with $45 billion, this took a lot of shares off of the market. Now, when there's less available shares, the price drives higher. However, when you're on 4 times leverage and the stock goes down, your equity in that position gets eviscerated very quickly. And when you lack equity in your position, the bank starts to margin call you and say, hey, pal, you got to put up your end of the cheddar. We're not going to lose our money first. And being that his short positions were nowhere near the money yet, he was unable to make those margin calls. Now, if Citadel had not purchased those shares, they would have hit the open market and eviscerated the share prices of those companies. Because you have to think, there are billions and billions of dollars worth of shares that were previously owned, now hitting the open market, the share price would have tanked. So Wall Street, having the leg up they do, were very cautious about the possibility of these shares hitting the open market. Personally, I believe we all owe Citadel a little bit of a thank you. However, this is the ultimate reason why this week was a pretty bloody week in the broader market. So we're going to talk about this in the next slide too. We don't need Nvidia to be good. We know they're going to be good. Every quarter, Nvidia smashes records. This is a company with numbers you've never seen before. They are making money hand over fist. They need to be perfect for any sort of substantial rise. There is so much expectation priced into Nvidia at a $5 trillion market cap. So think about this. You're a $5 trillion company trading at a multiple of 28 times what your current sales are. A lot of investors like myself look at a $5 trillion company and say, how much could you possibly grow? For me to make 20% of my money, you would have to increase over $1 trillion in market cap for me to see that return. So we need Nvidia to beat EPS, beat revenue, raise guidance, be in a great position relative. You got to think, China, listen, all the pressure for China on these semiconductors and the tariffs, all this stuff going on. We don't get a look behind the scenes of how those deals are working out and what sort of margins that Nvidia is working with. So if we're not seeing high margin, high cash flow, aggressive investing from Nvidia, then this is going to absolutely murder the whole AI supply chain. So the checklist. So data center demand, obviously, Nvidia is the huge benefactor of all these data centers going up. It's really not the infrastructure that costs a lot of money. It's all the software, the CPUs, the GPUs, the memory, the buildings themselves, the construction, the build out really isn't the expensive part. The real estate's cheap. The margins, China regulation, and forward guidance, those are all huge. We need to see that AI is still growing, that the supply chain is still increasing. By the way, who else is making PowerPoints for you guys? Okay, you know how much money I make from YouTube? Zilch, okay? All this effort going into it. Make sure you subscribe. Make sure you like. So here's what the bears are saying. Listen, the bears are saying that all of this revenue is circular. So Nvidia's buying stuff from Meta, Meta's buying stuff from Microsoft, Microsoft's buying from Nvidia. So it's really the same dollar that's circulating, which could very well be true. We just need to see that AI is going to start paying off and in a big way. So here's how it can go. We have the bull case. The big revenue beat, the big guidance raise, the margins looking good. It will start to justify the CapEx spend. The ecosystem looks healthy. It looks like a well-oiled machine. The base case is I believe they beat on EPS. They raised guidance a little bit. You know, they beat on revenue. The stock's probably going to fall a little bit off the rip because like we said, people are expecting more than perfection. But then people start to look at core values, okay? If the sentiment around AI starts to get muddy, people start to look at who has the fundamentals, who has the cash flow, who has the net margins, who has the reserves to survive. This money is already generated, already exists. It's within the market. So who's going to win? Who is going to pull all the chips to their side of the table? And this is honestly what I would like to see. If we see the market skyrocket, that's fun for a little bit. But remember, we're looking for buying opportunities. We are buyers of stock. We make money when we buy cheap stock. So if the waters get a little muddy, we are able to cash in on some great discounts across the board, like the Googles, the Metas, the Microsofts. But no matter who you are, if you've got a 401k, if you own index funds, if you're in big tech, if you're in semis, no matter where you're at in the market, if you are anywhat involved in the market, then it is a huge day for you on the 26th. Now, before we go, some call outs. What I've had my eye on recently, Intuit, okay? Intuit's down to a 21.9 PE. They've had a pretty good week, pretty good month. However, I think if they're able to integrate AI in some sort of little way and make it to where it's still a very user-friendly platform and they're able to adapt, this has a lot of room to grow. The next one is a big one, Netflix, okay? Netflix has gotten punished in recent times. Right now we're looking at the 5-year, but if you go down to the 1 year even, look at this, downhill big time, okay? They are down 50+% from highs, and I think we could easily get back to a fair value of about 107. Its current stock price is 75, so there's some healthy returns right there. And I want to go back and touch back on MUU. This is a stock we played this week where we were able to make about $6,500 worth of scalping profits. Remember, MUU is a 2x leverage Micron. However, the leverage resets every day. So if Micron is very choppy but goes up in a week, that doesn't mean that you get 2x of that week. Because that leverage resets, you're banking on the near-term volatility. So Micron earlier this week, like I showed in the last video, got murdered. I think it was Monday. We were able to hop on and catch that wave up. If Nvidia comes out with some strong earnings, expect an insane rally from Micron. They're down 40% from recent highs. And we have to remember, as an intelligent investor, I always say we have to be very diligent in these memory stocks, the semiconductor stocks. That is not to suggest that their numbers are unhealthy. These guys are making money hand over fist right now. So there's plenty of money to be made there. So I plan to present to you guys Tuesday of next week what new company we're going to go long in. The contenders: Lululemon, Nike, Caterpillar, PulteGroup, UPS, Netflix, ServiceNow, Constellation Energy. There's a lot to pick from. And here's the thing, guys, you have to remember, there can be a million stocks that have buying potential. But all of these stocks that I just listed, they're all great companies. They are competing for our dollar. We assess these stocks. Who is giving the best discount and who has the most aggressive growth? We're looking to make money and make money in the near term. So as you can see, our buy power went up a little bit. We're at about $66,000 worth of buy power. The reason being, I have a very hard time right now going illiquid completely with how much uncertainty around the market there is. We cannot fear a pullback. We need to see a pullback and be able to attack. Okay, we're like sharks. We smell blood in the water. We're all over it. However, these companies I just listed out show some very promising near-term results. So as I said, I plan to present you next week out of those stocks which one we will decide to go long in. Make sure you tune into that episode, subscribe, like, drop a comment. What do you think is going to happen after Nvidia earnings, and how do you see that panning out? And remember, every $10,000 milestone on this journey, we're doing $250 cash to a random homeless person. We just have to hit 5,000 subscribers, and we've already hit 3 milestones. Thank you very much, and I'll see you in the next episode.